You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little show we like to call around these parts, the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. Quite a few programs for you guys to peruse at your leisure, including 540-odd archived episodes of Option Block goodness for you guys to dissect. Easiest place to do that, of course, the mothership, the flagship, theoptionsinsider.com. A lot of great written content up there. We don't just do audio, even though we bang out quite a bit of it. We also do, of course, a lot of great write-ups and breaking news on the options market. Of course, if you like the odd block, we do a lot of UA over there on the site as well, and all sorts of other fun stuff. Again, find that up there. And while you're listening, or while you're reading, I should say, if you decide you want to listen, click on the Insider Radio Network tab, and your journey has begun. Of course, you can also hit us up, iTunes, TuneIn, Stitcher, pretty much wherever you find your favorite podcast programs. And I don't mention this a lot, but while you're there, if you are so inclined, if you like what you hear, throw us a rating on whatever your platform of choice is. I don't care, iTunes, Stitcher, Google Play. We're not picky here, however you like to listen. Throw us a rating if you are so inclined. Those things are always fun to read at the end of the day. And, of course, you can always grab us via our mobile app available for iOS, Android, and the beloved Fire OS. All right, and joining me on the old program today, our usual cast of Monday characters plus one. Let's flip a coin. Let's go far out. Let's go all the way out to the ends of the earth, aka the coast, where we find the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, glad you can join us. Did you clear it on the main schedule that you would be using the internet today?
Being the other user, you mean?
Yes, one guy who uses it. Did you clear it with yourself?
Thankfully, it is. But amazingly, I had another computer blow out on Friday. So, but somehow I managed to get online again. But the two users in Maine are happy and thrilled in crazy low pressure, by the way, right now in Maine. Very, very strange for the summertime here.
Everyone else is out crabbing and swimming and lobstering and doing whatever the heck else it is you guys do over there in Maine in the summertime. But you, sir, you're the one guy indoor. You're the indoor kid today playing on the internet. So it should be a nice quality connection from you. Let's see. Let's cut the distance now quite a bit, get a little bit closer to home. I should say a lot closer to home, to that scenic principality duchy known as St. Charles, Illinois, where we are joined by the one, the only Uncle Mike Tussaw. Uncle Mike, Let's see if you too are the only one using the internet in St. Charles. I know there were a couple people who were using it last time, and you guys seem to be competing for all the juice out there. Have you kicked them off the connection today, sir?
Well, I didn't kick them off. I mean, I wanted them to be able to listen to the option block at this time. So we'll see how it goes today.
There you go. Keep an eye on those whippersnappers out there. You never know who's using the internet out there in scenic St. Charles. And a lot closer to home, indeed, a stone's throw, literally, from the Options Insider Studios. If I threw a Herculean throw down the river, I could hit their offices. The Options House offices, of course. We are joined once again by Steve Clausen, the Chief Investment Strategist over there at Options House, fresh off his extended sojourn to the land of the North, a.k.a. Wisconsin. Steve, welcome back to the Option Block program, sir.
Thank you very much, Mark. It's great to be back. And yeah, we're close enough that we could string a couple of orange juice cans and communicate the old-fashioned way.
I have thought about that, but I don't think the audio quality is quite up to snuff there.
Not for thousands of listeners.
Yes,
but for me and you, we could have IM.
For me and you, yeah, I am the old-fashioned, the old kindergarten way, which is stringing two cups together. I like it. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the program where we break down what's going on in the old markets today. What's lighting things up. We're already getting questions coming in on the chat. Let's give it a few minutes. I love to hear your questions. I love the enthusiasm. We got to get through the other topics a little bit first, then we'll dive into your questions. By the way, we're gonna bring some more of your questions onto the Monday show. I think it makes a little bit more sense. So we'll be doing Mail Block Mondays, which I think is kind of fun, and give everyone a chance to chime in on your thoughts. Not just us. We were hogging them all on Thursday and didn't really make sense. Let's make sure everyone has a chance to enjoy your fun comments. And as we said, I forgot to mention again, top of the show, we are streaming live. So if you want to do it, go join that chat and make your questions known to us as well as your comments. Mixlr, MIXLR is the way you can do that. Just follow along with us via social media. You'll get the link there. You can, of course, just bookmark that page. That one Mixlr link, it never changes. So that's always our Options Insider page. When we're not doing shows, there's nothing going on there. But when we're doing shows, we'll be broadcasting live. You can chat and all sorts of other fun stuff there. And, of course, if you follow us on Mixlr, as I know a few of you do, then you'll be notified instantly the second we're going live. And you can just hop in there, comment, post till your heart's content. All right, let's kick things off. Like I said, we are recording live and streaming this Monday, August 15th here. So smack dab middle of one of typically the quietest, least active periods in the marketplace. Most of the institutional side of the business off baking themselves in the south of France or elsewhere. So markets are, shall we say, somewhat thin this time of year, and outliers notwithstanding, like August 24th of last year. Hopefully we won't revisit that catastrophe yet again. But yeah, as we're speaking today, markets in slight rally ho mode. Not a lot of news really lifting the broad market. Most of the major indices closing up for actually on the day about 0.3 of a percentage point or so. The NASDAQ up a little bit more than that. And all that upside still giving VIX cash, taking the weekend back and then some, up about 1/4 of a handle, closing right around 1180 or so. Still south of that 12 handle, reflecting again kind of a general malaise that is setting over the marketplace here as we are diving into all sorts of fun stuff. Let's kick things off. Steve, I know you've been up in the hinterlands of Wisconsin, but you've had your fill of beer and cheese now, and you're back. What caught your eye in today's activity, and what was lighting it up over there in the land of Options House on this very, very quiet Monday?
Yeah, it was a quiet Monday, but there's some stuff going on, and I think to your point about institutional desks being undermanned with people vacationing, I think that's really true, that you have the deputies and the deputies of deputies that are manning the fort for some of these institutions. So you're not seeing a whole lot of volume, which means rallies can extend themselves. No one's going to step in and take the other side of anything. So, but today I thought I saw bonds sell off, meaning yields are a little bit higher. XLU, the utility sector, was weak because dividends in utility stocks, when yields go higher in treasuries, those tend to be inversely correlated. Energy and material stocks were areas of strength. And the materials, I think what we found over the weekend was growing rhetoric on both sides of the political spectrum, both candidates saying, we're going to spend some money on infrastructure. And I think that theme over the weekend led people to put on their buying hats and jump into some of the industrials and some of the material names. And it's kind of a quiet market, but in these quiet markets, there can be some themes that present themselves.
Speaking of themes, I mentioned earlier, and our listener picking up on this, that in markets rallying and VIX cash easing up again today. So we'll rope him in now. Why make him wait for the listener mail? He asks, comes from Apex Fund. VIX and markets going up in tandem, bearish sign, he says. What are your thoughts? Interesting. It's kind of hard to read too much into the tea leaves on a day like today when things are so thin. Volume is fairly slight. Doesn't take a lot to really move any index, be it volatility or otherwise, in any direction. So a day like today with kind of nominal moves to the upside. I don't know if these kind of fractional moves are necessary, the sign of the apocalypse to come. If we had big moves in both, index was moving aggressively up and VIX cash also moving aggressively up, that would be certainly much more of a head scratcher. Perhaps leaning to your contrarian viewpoint that is indeed a somewhat contrarian sign, but it's kind of hard day like today to really read too much on of effectively a quarter percentage point move in the index, a little bit more, and a quarter handle move in the VIX cash. And there's a lot that goes into that VIX cash calculation. Obviously, we always, or not always, but typically see VIX cash take a little bit of an inhale after the weekends. Anyway, we often refer to that as getting the weekend back. People get a little bit overzealous going into the weekends, and that easily can overwhelm any other moves on a day like today when the market moves are so slight. That said, Senior Rock Lobster, was this a topic of conversation in the pit chat today? Do you agree with our listener? Disagree? This is a sign of the apocalypse here. What are your thoughts on this kind of the markets moving in tandem here, as well as whatever else may have caught your eye in today's activity, sir?
I like the sign of the apocalypse, though.
I may have added that.
That's
I may have put a few words in his mouth there.
You know what? I would say it's more the sign of the apocalypse if like VIX is 18 and the market is had a 1.25% move up. We had a lot of times this last couple of years where you had that sort of quantitative easing from Japan, zero interest rate, funky rally, and then vol never really came in on those rallies. That's because everybody was waiting for the inevitable sell-off the next day. So I think this is mostly just weekend effect. Normally we would drop a little more, or we would rally a little, VIX would rally a little more, but vol is so low and we didn't get that big of a sell-off on it on Friday. It's 1180 VIX. So I don't think we really actually net had much of a rally in volatility at all from that point of view. So, and every 20 or 30 cents in VIX now is tougher to come by. And all the futures are already priced. I mean, the future for next week is, what is it, 1350? So there's a lot of premium in those VIX futures already. And the way it's been going is it doesn't really fall apart until the week of expiration. So I don't expect a whole lot of that to change. And you want to see low vol, VXST is, we're looking at that was a bit of a conversation. It's 9%. You want to look at something funny? Look at the range of short-term vol this year. It's just there isn't everybody. People are looking for a reason for it to sell off. They were looking for a reason for the market to crash in January and February. It was kind of gloomy. What's all this quantitative easing going to do? And I think there was honest doubt on what all this monetary easing, they didn't know. I think all the central bankers are going in uncharted territory. So can they undo it? Yeah. They're holding all their own paper. So I guess they control how it's marked. It's not like the financial crisis where everybody's marks on a CMO were, Goldman marked them. So, now the central bankers are holding all their own paper now, so they don't have to worry about that problem, which was a big part of the financial crisis, which a lot of people don't realize. So I think there's a reason why volatility is low. Maybe there's an acceptance that there could be some sort of slow way out of all this, and that is not necessarily bad for U.S. equities. So are they more expensive than they've ever have been in history? Yup. Are the relative prices as bad as they were in 2000 or 1999? Not even close. I think mostly everybody wants the market to fall apart so they could go scoop a little again. They're probably bitter they didn't pick up the 1800 handle and the SPX or the 1850 that they could have got this year. But it seems like it happens about every quarter. So we'll see. But as of right now, no, I don't think it's a sign of the apocalypse as yet.
I like that. You get points for first dead product invocation of the day, which is VXST, a blast from the past. I haven't thought about that one in a while. Not least of which since SIBO essentially obviated it by bringing in the short term, the VIX products, VIX weeklies, and that kind of just got rid of the need for any sort of VXST. But you're right, it is printing below the 10 handle for whatever that means now out there in good old VXST land. The old loved and lost VXST. How often? We're probably only network, the only program on the planet on VolViews that devoted any resources or time to that product that just withered and died on the vine. Yet another of the sad losses of 2015 into early 2016, along with the minis and a bunch of other products that have gone lost but not forgotten. So speaking of not forgotten, he's been quiet, but we'll bring him back on now. He is Uncle Mike. Uncle Mike, what's cooking out there in the land of all things TUSA from a market perspective today? And if you have any thoughts for these, like we were just talking about, are everything moving in tandem today, have at it, sir.
Oh, for sure. We're gonna have an interesting year-end show this year when we go through some of the expired products. But anyway, I think the big mover on the day today was oil. That's really the only thing that's catching any attention. Apple was up a percentage point on the day today. The thing that I still find the most intriguing about this, along with the VIX moving up with the market, is the fact that, not today necessarily because bonds went down today, but the fact that we have not had a very significant pullback on the bonds. With that, just something to continue to look at is that bonds are higher, oil is higher, gold has been rallying, although over the course of the last maybe month and a half or so, it's been rather flat. So with that being said, I think that this is something to watch. And in about 3 weeks, once everyone comes back from, as you put it, Mark, the south of France, I think we're going to get some more direction in the marketplace. If we're up 10% on the year going into Labor Day, I'd be interested to see if we can continue to pull through that. Aside from what I just mentioned, we're going higher, and there's not a lot of news to drive us higher. But on the flip side, there's really not a lot of news to drive us lower either. So we're continuing to just go up little by little, and we'll see where it takes us over the course of the next couple of weeks.
Thank you for that, sir. If you guys are hearing that little ping in the background, that is we upgraded our platforms here to Windows 10, and it's deciding to notify us whenever there are little chats popping up in the chat there. So we'll see if we can get that turned down for you during the show here. But not you guys in the chat. You guys feel free to keep commenting away. Let's move on here. Other activities. Oh, speaking of the chat, we've got Saffer in the chat room saying he's shorting Apple. Well, there you go. And he says because Einhorn sold shares, and I'm trying to get this up here, and she in the short term, and gold is going lower. I hate to make assumptions there. But yeah, a lot of other stuff cooking it off in today's activity. Oil up yet again. It was up over 1.5% at one point intraday. That, of course, giving the market a little bit of a lift again as well. Speaking of Apple, our Saffer friend was referring to shorting Apple. There was potentially some interesting developments out there in Apple land. They indicate a couple of counterpoints going on. On the one hand, they were saying some kind of inside baseball stuff regarding whether they're going to repatriate some of their overseas assets. A very lengthy story over there in the Washington Post, also hinting at maybe getting into the VR realm and kind of not really hinting about the car too much. So kind of interesting. Apple kind of maybe playing a little bit of the Johnny come lately in a lot of areas now, jumping into VR after it's hot, jumping into electric cars potentially after they're hot. So, but all of that, and also of course the news over there with Twitter, of course, giving Twitter a nice bump as well. All this just on the news that Apple up 1.2% today, and Twitter, of course, up nearly 7%. That on the news. That of all things, there was rumors that Twitter was in play over the last few weeks, and now talks that they're going to add it to the Apple TV. And that in and of itself was enough to potentially, or apparently I should say, really drive the stock up. I know, Mr. Rock Lobster, you guys were really watching a lot of Twitter over there in the pit chat. What are your thoughts on, and what were your people in there's thoughts on today's crazy activity?
Is this the news that's been driving it up? Awesome news. I mean, Apple. Apple TV right now kind of feels like Betamax, unless I'm totally. Or is Apple going to do something to TV like they did to music? I don't know. But an underpriced property, although it's probably kind of fairish at this level for what for kind of the money it's generating. But like you said, anytime volatility in Twitter gets to the 40s and you buy it over the last 2 years, it has been a win. So I'll just keep doing it, and I'm riding the last batch of stuff I had. Actually, I bought it before earnings. So I do. I think the name has some room to run, but I'm long it, so I'm just talking about what I have anyway. But I was long it from higher levels, and if it wasn't for those things called puts, I would have been a much sadder boy. But as of today's print, I'm a happy boy. There you go.
Well, I'm glad you're a happy boy. Speaking of happy boys, let's keep on rolling. Got a lot of questions coming on the chat. We'll get to those in a little bit, but we got to keep on rolling with our program into everyone's, I hope, favorite segment. Certainly one of my favorite segments. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the Odd Block, the portion of the show where we break down the darker side of the options markets and put on our fedoras and our trench coats to bravely go where angels fear to tread. Let's kick things off. Speaking of scary, you're thinking of Polaris Industries, of course. Ticker symbol PII. You're not familiar with these guys. They make a lot of those kind of four-wheel and off-road, and I've seen some very funky street legal vehicles coming out of them too, kind of like quasi motorcycles that are I saw one suit up like the Batmobile at a show a few months ago. So they make some pretty funky off-road and on-road type vehicles, all sorts of things that are kind of sub-car type things. This is the name, not the most active of names, but it does a fairly decent paper, about 1,500 contracts a day or so. Today doing nearly 15,000, so pretty active, over 10x their ADV, about 15-1 puts over calls. That should give you some idea of what caught our eye out here. And it wasn't near-term paper. Oh no, it wasn't even SEP, all the way out to October. I should mention, by the way, Polaris closing $98.66, up about 4% on the day, or nearly $4. And that rally apparently sparking someone to say, you know what? I'm a wee bit concerned at these current valuation levels, because they came in and gobbled up the AKAM 9080 put vertical, doing that right about 6,000 times, a little bit more on the 90s, a little bit less on the 80 puts. All of that on pretty much negligible open interest. So that is clearly opening paper, doing that spread about 6,000 times for $2.20. Again, there's a lot of things this could be. It could be a stockholder a little bit concerned about some near-term downside. Could be someone just saying, you know what, this near-term pop is way overdone. and I'm going to ride this bad boy back down, or it could be maybe something else entirely. Again, open interest showing us it is clearly opening paper. And this name, if you've been following it of late, it's been pretty good the last couple of months for the off-road vehicle market. This thing gapping up, in particular, back on earnings in early July when it gapped from about 10 handles, from about 85 to 95 overnight just on the earnings. And so this thing has been kind of in this mid-90s range and bouncing higher ever since, flirting ever so close to that 100 handle, but not making it. Getting close to that level again back in April. It was actually breaking it back then. I hit about 102. So it has flirted with higher levels in the past, but right now it is clearly at the upper end of that near-term trough. Mr. Rock Lobster, what are your antennae telling you about this one? Think this is a long holder, perhaps just deciding to get a little bit squirrely, deciding to hedge themselves, or perhaps someone just specking on downside, or something else entirely? What you feeling over there in the land of Maine?
In the land of Maine. Oh, that's my computer. So in the land of Maine is, I'm going to say, it feels like hedging activity. Because the thing was, what, 65 or 70 bucks, high of 150 about a year and a half ago. Pretty amazing for maker of snowmobiles and four-wheel drive buggies. So yeah, and you do see a lot of those weird three-wheel carts around, don't you? So
I'm sure you do out in Maine. They probably like that. That's considered a car out there, right?
You know, though, summertime, that stuff is everywhere.
I think you have a bit of a biased sample in that scenario.
You know, there's, you know, what's funny? Well, let's put it this way. There are more ATV shops in my little two-town area than there are supermarkets.
Well, there you go. Yeah, I don't see a lot of Polaris four-wheel vehicles rolling around the streets of downtown Chicago, but you never know. Maybe I missed a few.
No, but there's like 3 of them within 9 miles of my house. So anyway, to give you some perspective. So yeah, off-road vehicles, they're great. Anyway, but it does look, this does feel, it's got the feel of some sort of hedging activity to me, but it could be straight out spec, like everybody else is thinking the end is near, but it just like feels like good old fashioned put buying against maybe an equity position. You know, that's a good sized position. That would be, let's see, 500,000 shares. So that's kind of fun sizey for that.
That is indeed fun sizing, and I think that shaking means we got Steve coming up. Steve, something catching your eye out here in good old. First off, do you watch a lot of these four-wheel vehicles around your time in Wisconsin?
Well, let me tell you, Wisconsin's got a ton of these things. They've got it all covered. They've got the jet ski covered. They've got the ATV covered. They've got snowmobiles covered. So any season in Wisconsin, you're ready for Polaris something or Polaris or whatever it is. But you know, I do think that trading the put spread versus just buying an outright put hedge is actually very telling in this instance, where volatility in this name is still on a relative basis a little bit high. So by selling that 80 put, he took a third off of the cost of an outright put hedge. You know, buying protection if it is a stock hedge down at the 90 level, and then saying, you know, it's not going to drop 20% down to 80, but you know, a pullback might happen, and so he's really reduced the cost of his hedge, also taken off the volatility component of his hedge by doing a put spread versus an outright put. So I actually think that's a wise, prudent move in this sort of volatility environment we're in, where vols are cheap, but your movement is not necessarily happening, and so you don't necessarily just want to buy it with both hands, except maybe in Twitter. But in Polaris, you know, buying a put spread versus a put and taking a third of the cost away from your hedge, I think is a smart move.
Yeah, definitely. You know, we recommend that a lot to a lot of our listeners out there. That whenever possible, I know that's Mr. Rock Lobster's MO as well. Get your juice for cheap, if not for free. And the best way to get cheaper juice is to have a spread, some sort of short leg against your long leg, to just offset that outlay and make things a lot easier for you. Moving on here in the old odd block, this is another one, ETP. No, not talking biological processes, but instead Energy Transfer Partners LP. closing, like I said, $41.51, ticker symbol ETP. Pretty much unched on the day on the underlying. This name does about 7,000 contracts and change, doing about 3x that, about 21,000 contracts today. Almost 51 to 1. Calls over puts, that is where our attention was drawn. Yet again, this time going even farther out, not to SEP, no, not even to AK or DEES, no, or even Jan, no, Pshaw at Jan, it's all the way out to March. Yes, the March 50-60 vertical. We were talking put verticals before, flipping the script, talking call verticals, and now it was the March 50-60 going up, paper buying 10,000 times for doing that for 93 cents net debit on that. That's on. There is some open interest there. About 5,000 contracts open. Clearly, this is opening paper, unless they decided to reverse themselves completely here. Probably not the case. So they could be indeed piling on to some earlier OI that came in earlier. It is kind of odd that is the one. Those are the two strikes, I should say, in March that have any real sizable open interest, and they have exactly 50% of what went up today. So probably some sort of connection in there. Maybe Mr. Rock Lobster was able to ferret that out. And again, this name closing today a little 41.5 or so about 10 handles south where this spread needs it to be. Looking back at the year that was out here in ETP, we see this one has flirted with higher levels in the past as well. Like a lot of names, kind of got beaten down in that beginning of the year trough of January into early February, where pretty much everything was just taking it on the chin. This thing was also down, got down as low as nearly in the teens almost. It broke 20, got down to 1991, and even got as low as 1862. At one point. So this thing has been substantially lower. It's effectively doubled, even a little more, since that bottom part of the trough there. So this thing has been on an extended run to the upside. And you know what? Our friend says it ain't done yet. He's going all the way out to March and paying a whopping 93 cents to get another 10 handles of already at the 50 handle. You're talking a very, very extreme rally in this name. And our friend saying, you know what? 50 handle and beyond. So this thing clearly needs to rally, obviously up to about 51 for this trade to break even, and north of that for this thing to really make any decent money. I don't know, Mr. Rock Lobster, this seems like maybe you have a different opinion, but this perhaps may be a bridge too far. What are you thinking here?
You know, Mark and I were talking about these. We saw, I guess it was like January, February, when oil, everything was kind of just, remember there was sadness overall in the market. I saw, it must have been some fund. They went into AMJ, AMLP. Those are the index, basically the indexed funds for all of these MLPs. They're the ETFs that are the kind of aggregators. Buying upside call spreads. I think at the time they were buying the 30s or the 31, like the 31-35 spread for like 45 cents or something like that. At the time, it looked like astronomical pricing because they were way, way, way out of the money, and then lo and behold, here we are, and the spread is actually in the money, I think by about $1.50 or something. So very similar acting paper, similar trade setup. It looks like, for another leg up in this space from where they were. So. And I'm actually looking, I look back at a little more time in sales. Like the Jan 50-60 traded 20,000 times. I was trying to see if that was a close. That happened actually a while ago in August. But it's the same kind of paper. And, you know, if it is the same guy who had this on before, buying the upside spreads and all these names, maybe they know something or how that's going to affect all these players. But I have seen this movie before, and these trades look absolutely ludicrous, and they make tons of money because the stocks go on some crazy run. So if it is the same guy, that is what has happened before. So if you look on August 3rd, the Jan 50-60 call spread traded as well, 20-something thousand times, huge size. So all I'm saying is lightning could strike twice if it really wants to. And there you have it.
Thank you for that, sir. You guys can tell by that little ping that I'm still wrestling with that Windows 10 notification. All the joys of new versions of Windows. They bury everything many, many layers deep, which is always fun when you're doing a live program. But all right, let's wind it down here on the old odd block with another one we haven't talked about in a little while. But this one has been featured in the past. This is Akamai Technologies Inc., ticker symbol AKAM, AKAM. No, not Arkham. For all you Batman fans out there, just AKAM. Arkham would be quite cool, though. Ticker symbol AKAM, like I said, closing $52 and a nickel or so, pretty much unched on the day. This is the name that does about 3,000 contracts a day, doing a whopping 18,000 today. About 8-to-1 calls over puts, and that should bring your attention to where we found it, which is not, this time, not as far out, and no spreads to be found, unlike what Steve was talking about earlier about the joys of spreading versus single name buying. Our friends here didn't get that message because they were piling in to the AUG 53 halves, just gobbling these bad boys up. As the day went on, we saw about 4,800 starting the day, a total of about 5,600 going up on the day. This on open interest of just 46 contracts. So clearly open in paper. Started buying them for, well, they put a lot of prices starting around 21 cents, and they got them all the way up to 45 cents. That one's going to hurt because they went out today 16 cents at 19 cents. So whoever picked up that latter kind is perhaps a wee bit angry at his execution out there. Again, this is opening paper, and looking back at the chart here for good old Akamai. This one, like a lot of the other names we were just talking about, kind of a very repeatable chart, a nice little trough there in the middle, right around the Jan, early Feb time frame with some peaks on either side. And this one kind of retracing up the peaks to the right as well. Got clipped a little bit a few weeks back during earnings. It was trading about 58, then got cut down to about 40, and got into the low, actually high 40s, I should say, 48 or so. So clicked about nearly 10 handles. Now starting to retrace its way again. Like I said, closing today, $52.05. So clearly our friend here thinking the best is still to come, and think it's going to come fairly early, piling into these AUG 53 halves. Mr. Rock Lobster, take us home. What are your thoughts here on all this Akamai? Actually, before I do that, I could see Steve's ears perking up on this one. I could tell the second I mentioned, Steve, the no spread, just the outrights, that you were going to maybe take umbrage of this one. So what do you think of our friend here gobbling up some near-term upside in Akamai?
Yeah, I think this one, like you said, it sold off on bad revenues, and today it opened up $1 higher than where it closed. It opened up at near $53. So, I think people thought this was off to the races, and it was a cheap spec, and that's why he paid a little bit higher for these options than they ultimately closed. Definitely keep an eye on this, but we only have to watch for another 4 days because these are expiring this week, and I think he swung and missed, quite personally. He, it was 53. He maybe thought there was going to be more follow through right away. Instead, they did find some sellers throughout the day, and it came back to only being up a small amount today. But people do that. They spec on these short-term options, super low premium. The guy's probably pissed that he has to be in working this week anyway. He said, I might as well make it worth my while, and he put down a little cheap bet.
Is that your take as well, Mr. Rock Lobster, over there while you're watching all the Polaris vehicles go by your window?
And actually, sometimes every once in a while you can hear them rumbling past on the water. This one, yeah, I think the short-term technology, these things are almost any old technology company, which was hot in like 1999, which Akamai was. It is now a mature company, and it's almost like everybody's going to buy them. So whatever spec the guy was running on, we've seen this so often, just Spank City. So he's got 4 days, but as of right now, it's not looking very promising. What's weird is they just reported earnings. They weren't that great, and then you going in, you spec, you buy out of the money calls. So I hope the earnings are great. That's all I can say. Or I'm sorry, not the earnings, but whatever the news is, because they're betting on something that has yet to materialize, and they got 4 days, like Steve says, to do it.
Indeed, we shall see. Meanwhile, switching things up, like we said, going to do a little bit of listener love here on the Monday show because it's time for a Monday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys can hit us up all sorts of ways at Options on Twitter, via the website, questions at theoptionsinsider.com, via the website feedback form there, Facebook, The Options Insider, stock twits. We're at Options Insider, or like a lot of people are doing, you can hear all those pings going off earlier via the Mixlr chat. I think we got it down to a science now. Over there, MIXLR, you can tweet in live, and we'll make sure we feature the live ones first, because we like to make sure you guys are get your love on the live show. Really quickly, we were speaking of, a lot of people were asking about VRX in the chat. We did tweet out our question of the week this week is VRX. At the time we did this right before the show, was right around 26.66. It was up about 7%, a little bit more. The implied vol was about 63. The historical 30-day vol, I should say. The historical 30-day vol right about 99. This thing's been rocking and rolling of late. So we asked everybody, looking out 1 month, would you rather buy calls, buy puts, sell premium, or won't touch VRX with a 10-foot pole? I don't know. Uncle Mike, we'll start with you. What do you think is winning our VRX poll?
I'll go with sell premium.
Interesting. Steve, where do you fall, sir?
Volatility is so cheap, it's tough to imagine being able to sleep short premium, but then things aren't moving overall. So, man, I think was stay away one of the choices, or that wasn't a choice?
I have don't touch VRX. That's one of them. Yes.
Don't touch is my choice, though.
I am all over that one.
Yeah, I can hear that. Mr. Rock Lobster, what do you think, sir?
Well, I wrote a blog on this last week about delta neutral backspreading this one, which turns out to be, it was quite timely. So I don't know if I would buy calls in it, but I like the juice in it. So what are my choices?
Pretty simple. Buy calls, buy puts, sell premium, or don't touch it. So if you want to buy, you got to buy calls, or you got to have directional bias.
Oh God, it calls us. I don't want directional bias. That's the thing.
That's the fun part.
Directional bias is for other people, not for me. So I will say
it's also for Twitter polls, which keep things very simplistic.
That's true. All right, so we'll say I'll bet you they're out there buying calls.
Well, you are correct, Mr. Everyone also said sell premium, but don't touch it. Buy calls is the winner by a pretty healthy margin, about 40%. By the way, VRX just sets people off to the races. People flooding into this poll. Just posted it like an hour before the show, half an hour. It's already, people are rocking in. We got a whole week to go, people. But still, if you want to let your voices heard, go ahead and do that. 32% saying they won't touch VRX with a 10-foot pole. I could certainly feel that. We've got a H-vol of 90, 99, almost 100 right now just in the last 30 days. Things been rocking and rolling of late. 17% saying sell premium, 11% say buy puts, make your voices heard. Speaking of which, a lot of you are doing just that. Let's look at the chat here. And let's see, a bunch of people coming in. People asking about gold. I mentioned that early. Safford, by the way, I apologize. You are she. I said he. That's my own assumption here, asking about shorting Apple. We have Joe 736 says, do you think VRX will sell off a buck to open tomorrow? Let's see exactly where it closed today. Closing 26.61, a buck. That's a very specific level. He says he loves, Saffer come in and say they love VRX if it does buy more. A lot of chat going on in the chat, which is always fun. So let's start with VRX. Everyone looking a buck off on VRX. So let's see. VRX has been an interesting one. We talked about it last week, pricing in a lot of juice to that straddle, underperforming at least initially on the open after the earnings, and then gapping up hard and kind of exceeding its straddle, I think by about almost 2x after. I think they were pricing in about $3, as I recalled. They opened up about $1.50. Then by the end of the day, they were up about $6. So they blew the doors off. Everyone was specking to the downside. They were buying puts. I think the 15 put that was expiring that week, or the monthly 15 put, was the option du jour. People were loading up on that for size. They all got essentially run over. There's nothing left of juice on that 15 strike now. And then, of course, a day, not even two later, we saw news of that federal investigation. I think it was up at 28 plus, got cut back down to around the 24 range. Then, of course, today up about 7% again. Again, I haven't seen all the latest news on VRX. Clearly, that investigation is not going to be the end of them, the death knell that some people were perhaps posturing about. I don't know. This one's obviously a very popular one. Steve, is this a hot name over there at OH these days as well? And what are your thoughts for our friends here who want to know your thoughts on VRX, short-term bullish, bearish? I think you said you wouldn't touch it, so maybe we'll let you slide on that one. But are people lighting us up over there at OH right now?
They actually are taking my advice and not really playing in this. I think this is the new Widowmaker. If Twitter is no longer the Widowmaker, VRX might be the Widowmaker.
Netflix might still hold the record for the most widows made per capita. But that's a conversation for another day.
Agreed.
All right, let's. I don't know, anyone else, Uncle Mike or Mr. Rocklobs, anything else to add here on VRX? You were talking about your back spreads. You want to get into that a little bit, Andrew?
The simple thing is, I think you trade a stock like this with puts and you let it go where it's going to go. The thing is, the story is still alive. So 50 volatility and a $26 stock, that might not mean anything to anybody, but it's not that much. And anything can happen with this thing at any day. They could announce another asset sale. I mean, there's just too much going on. Unless you really took a hard directional opinion, you probably could sell 20 level puts and not get totally killed. But it's so easy for the thing to move 20% on just almost nothing that I think the premium is too cheap. And I think the reason it's cheap now is because some people or traders that have bought stock at lower levels are like overriding the 30, 35 calls. And because they were very expensive. The vol was in the 70s and 80s. So they're just selling a ton of that stuff on the upside. That brings the vol in, which makes all the other stuff cheaper. But as of now, it doesn't look like it's going out of business, but that doesn't mean it can't. So I think just trading a delta neutral back spread, so when the stock goes down, you either dump your puts or you buy more stock. If the underlying moves up, you get to unwind your stock position, or you can sell calls against it. So you have things to do when the underlying moves, but normally I would say that is not a position that would make you money, only if you've got some crazy realized vol or vol expectation. And this stock still has it. It still finds a way to move on. They're still getting, put it this way, they were in front of Congress last year, and now a year later, now the feds are looking into, whatever they were doing with their pharmacy. So it's a story, and when I hear story, I want to own premium in a story as long as the premium is relatively inexpensive, which I believe this is.
I'm in the school of thought to just stay away from it personally. The stocks like these are ones that really enhance my business because people will write premium on them, not do so hot, and become a customer at that stage. So that's kind of where I'm at on it.
And I can't disagree with Mike. I wouldn't want to sell juice in this thing right now. No way.
No, this could easily be a new Widowmaker. Just the vacillations it's had alone over the past week. Like I said, the 30-day historical vol almost at 100. That's a pretty good clip for a $26 or so name here. Really quick, we got people asking too about PAAS, PAAS. Not one we talked about on the show, I don't believe, before. This is Pan American Silver Corp, closing today $20.79. They want to know where we think this name is headed. If you guys have listened to some of our other shows on the network, like TWIFO, This Week in Futures Options streams every Friday, comes out Monday morning, so you guys are listening to it now if you didn't listen to it this morning. We talked a lot recently on that show about the near-term spike in silver. Silver, kind of a bit of the red-headed stepchild when it comes to the shiny stuff. Everyone talks all gold all the time, but silver was rocking and rolling for quite some time up there, having a decent rally. It's kind of come off a little bit of that now. In fact, I'm looking backed by our friends over there at Quick Strike, looking at the volatility skew out here going out all the way into early next year across the term structure here of the big futures, options, and silver out here. And the calls are leading the dance, so that's where the heftiest premium is. But if you look near term, people have been really piling into puts of late. It's an extremely aggressive slope to the south, down around the 19.5 handle or so and below out there in big futures. And if that's gonna be maybe the leading course for indicator for perhaps some near term downside in silver, I would probably speculate that PAAS is probably going to follow suit at all. So if I had to wager on PAAS next week, I would probably say maybe some of this downside specking in silver is going to bear some fruit and maybe weigh a little bit on PAAS. I'm not talking a ton. The silver has come off a little bit already, but maybe continued a little bit of downside out here. Uncle Mike, I know you're a well, I know Mr. Rock Lobster. Sounds like you're a big fan here of all things PAAS. What do you have to say here for people who want to know where we think PAAS is headed? PAAS, not the egg decorating makers. Those are, I believe, PAAS.
That's funny.
Also a fun name, but for a different time of year.
I mean, PAAS, the stock was $5 this year, and it's 20 3/4 right now. So I know silver's up, but is it up this much? It's at a 2-year high. The miners have caught some sort of fire. I don't know how it can sustain what it's doing, but I'm not going to get in the way of it. But I mean, you got to look at it and say, oh my gosh, the thing is up. What is that? 200%. So it's doubled twice this year. What do you say to doubling twice? Do I not want to short it? No, I don't want to short it. But I would be surprised if it maintains this level by the end of the year. But it's just all the miners are nuts. So to me, like I said, when there's a story, things are crazy. You want to try to own premium if it looks reasonable. And I think right now the miners are stuck somewhere in our endless QE loop, and nobody really knows quite what to do with metals, especially all the precious metals. But right now it's when in doubt. Traders are buying all the metal stocks. So actually, remember George Soros made this call. What is it? February or March? He was buying all this stuff. So when he starts to sell it to everybody else, then it's probably the run is done. That's all I'll say on that one.
Yeah, I'll add something on that. A lot of times you'll see like the silver stocks or the gold stocks outperform the metals themselves when they do have a rally. That's fairly common a lot of times. But like anything, what goes up must come down. And if the metals do pull back over the course of the next few months, then I could see this. Silver wheaton's another example. I could see stocks like that just heading down at a faster rate than the metals themselves as well.
And the only thing I would add, if I'm on, is if gold and junior gold miners are trading on crack cocaine, trading silver is trading with steroids on crack cocaine. Silver moves 3 times faster than gold stocks.
I like that.
Steroids on crack.
Steroids. We might have a title: trading steroids on crack cocaine, or something along those lines. I like it. Good stuff here. We got a lot of other people emailed in, but I want to make sure we got a couple more live ones. People in the live thing want to know also about Amazon. A lot of interest in Amazon. People playing a lot of the whither will it game in our chat. Where do you think it's going to be headed? Amazon, of course, had a good run of late. They're kind of one of the few big bellwethers to do pretty decent coming out of the earnings cycle. This, for the most part, a generally underwhelming, I should say, cycle. That's with the exception of a few big names, and Amazon being one of them. Amazon, I don't know, Steve and Andrew, you guys spent time on the SIBO as well. I remember when I first walked onto the floor of the SIBO. It was in the late 90s, so about 97, and that time frame shortly thereafter is when Amazon kind of came onto the scene. And I remember even hearing back then, you're talking almost 20 years ago at this point, just the constant refrains of Amazon burning through cash. It doesn't make money. All these things it does, it gives away money to customers. All these things. And here we are, almost 2 decades later, and we're still seeing the same charges being bandied about against Amazon yet again. They don't make enough money. They're overvalued compared to their multiple, which I'm sure as a diehard fundamentalist, Andrew, that must really upset you. Here at the closing today, 768.50. They're off about 4 handles today, which for them is only 0.5%, not really a big move at all. But of course, they make a lot of money on the backbone. They're really the backbone of the internet these days with the AWS and a lot of those services really just really wiping the floor with a lot of other players in that space. So kind of not the sexy stuff. It's not selling, selling the latest tchotchke for a 30% discount that gets everybody excited. It's the behind the scenes backbone that really is where a lot of the money is being made for Amazon, as opposed to the sexier consumer facing things like Prime and others that are probably maybe lost leaders for them at this point. But interesting stuff. There's a lot of back and forth. I know, Andrew, I know you fall on this one as a diehard fundamentalist. I don't think, Steve, we've had a chance to have you weigh in. Are you one of these naysayers on Amazon, or do you think people have been naysaying it for so long that you kind of have to get out of the way? And what also are you seeing out there in the OH landscape? Are people active on Amazon, a lot of call buyers, or what's going on out there in Amazon land?
There are definitely a lot of believers in Amazon in the retail community. Naysayers, I mean, this is a stock that does a lot of things behind the scenes, like you say. They dominate the cloud, but this is a stock that retail investors can actually use, and they use the product and they say, hey, they have a really good service. I buy something, it shows up on my door, sometimes the same day in Chicagoland. It's incredible. And speaking of my fact-finding mission on beer and cheese up to Wisconsin, there is a building that is bigger than the Pentagon in my site that is just north of Kenosha, Wisconsin, an Amazon fulfillment center. And right across the highway, they're building another one. So they are, they're incredible. They provide a great service. They're huge. They've redefined the retail landscape. They do a lot of things and execute really, really well. So I think this is one of those darlings of retail that Apple used to be, that was an innovator, a fulfiller, somebody. You feel good when you go to a cocktail party and you talk about, hey, I own Amazon, or nobody owns Amazon maybe outright because the stock is so highly priced, but they own Amazon call spreads or something like that. And there's just a ton of excitement in the retail community for jumping on board and being part of the, it's not necessarily a revolution anymore. You point out that they've been around since this entire century. When did it go public? In 98 or so? But the naysayers, now they make money too. Their earnings are incredible. The one thing I would note is if you look at the monthly ranges of Amazon now, this year versus prior years, those ranges are quite a bit more. There's a little bit of volatility up at these levels where, today's move wasn't much, but some of the monthly moves in Amazon have been pretty significant, 50, 60, 10, 70%, $70 moves in a month is not unusual. So if you are in this stock, wear your seatbelt and use options. It would be my suggestion that you consider using options, because there's quite a bit of macro movement. It doesn't necessarily happen every day, but it certainly is much larger than it has been in the past. It used to only move on earnings, but now it seems to move. It moves in a trend and keeps moving. So hang on.
Unfortunately, we had so much fun answering your questions. We got carried away in our mail call Monday here, so we have to do kind of a quick combo around the block and let you know what's coming up next on our various platforms as well. Mr. Rocklops, I know you got to run. I know your clients are waiting for you. So really quickly, tell us what you're watching for the rest of the week, and then what's coming down the pike in the land of all things option pit.
Looking to see what VIX. I'm still think we're going to have a record, not a record, but a low settle for the year. I think this Wednesday. We have the Fed, the minutes coming out. Probably more of the same. It's more of the same. 2200 on the SPX by the end of the week.
All right, sir.
That's what we got.
Go forth and prosper. Have fun with your clients. Check out optionpit.com to learn more. And Uncle Mike, same question for you, sir. What's cooking in the land of all things RCM Wealth Advisors?
Well, if you have any questions in terms of investing your money and want to work with a gentleman that is not afraid to deal with options, give me a call at 312-212-3531 or shoot me an email at m2saw@rcmfs.com. In terms of what I'm watching for the rest of the week, the Olympics, of course, making sure we don't have any major tragedies or anything there. I want to see a lot of the events. Very excited about the rest of the week that we have in that. I also want to see if oil, at this rate, we're going to be above 50 pretty soon in oil, but don't know if we're going to quite continue this quickly. So continuing to watch oil and want to see if gold will jump on the commodity bandwagon as well.
All right, and last but not least, Steve, I know you're back from, you said, from the big Kenosha Amazon scouting trip up there, but now that you're back, I know things have kind of been rocking and rolling of late over there in the realm of Options House. Have things settled down a little bit, and what's coming down the pike that our listeners can look forward to?
Yeah, we're clicking on all cylinders. I mean, throughout a slow summer, it's gotten a little slow these last couple of weeks, given holiday schedules and people taking a last vacation before having to take kids off to school. But this week, I'm looking at the Fed minutes as Rock Lobster talked about, and we have some more retail earnings that are going to be interesting because the retail earnings told a different story than the retail sales number on Monday. I think that was a little bit misleading, and the individual retailers are doing quite well. So I'm going to be interested to see if that's carrying on. And then at Options House specifically, tomorrow I'm hosting a webinar talking about a strategy that users, stock traders can employ to take a few chips off the table. I'm talking about the stock replacement strategy tomorrow at 3:30. Webinars are free. Go to optionshouse.com/webinars to register and find out more. And you can use the long call, stock replacement call strategy to get hedged positive exposure to the marketplace with a downside hedge. So things are going well.
Glad to hear it. One of my favorite strategies is stock replacement. You can learn about that in just about any environment. This one, certainly a favorable one if you want to go long some premium, as you do in the stock replacement strategy. There are worse times to be considering such a thing than when premiums are fairly low. So yeah, check out that webinar if you are so inclined. If you're listening after the fact, I'm sure our friends over there at Options House will have it archived for you. Surf on over to optionshouse.com to learn more, and of course, search for the webinars there under the education section. On behalf of Steve and the Rock Lobster who had to run, and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course for sending in such great questions and for sending in so many live questions. Sorry we didn't get to all of your emailed and tweeted in questions. We'll get to those on another program. We got hijacked by the live ones, but it was pretty fun. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.